Hello and welcome. In today's short video, we're going to review some of the latest jumbo mortgage changes for 2025. If you're a home buyer and you have any questions about a jumbo purchase or refinance for your home, please be sure to reach out to us 7 days a week by visiting jumbomortgagesource.com or call us at 800-962-0677. Okay, so first, the big change, of course, for 2025 is that the conforming loan limits have increased yet again for, I believe it's the seventh consecutive year. Of course, a jumbo loan is any mortgage that exceeds the conforming or conventional loan limits. Right now, for most of the country, the majority of the country, for a standard one-unit property, the conforming loan limit would be at $806,500. And that can go as high as 1.209750 for the high cost locations in select areas around the country, which we'll look at next in the map. But this is the base limits, and of course for multi-unit properties, 2, 3, 4 unit properties, these conforming loan limits even go higher. It's important though, if you're watching this video outside of 2025, to refer back to the website, because these conforming loan limits can and do change. And that again is going to be the current limits, and any mortgage beyond that would be the jumbo loan. Okay, so here's the snapshot of the high cost areas, the map. All the gray area, of course, most of the country, that's going to be limited to the $806,500. And then it can go much higher depending on the location. The darker shaded areas, those of course are going to be at the max ceiling limit of 1.209750. Alaska, Hawaii, parts of California, Colorado, DC, and then of course around New York and the Northeast. So that's a snapshot of the current high cost locations. Okay, so for, again, any loan that is over that amount would be a jumbo loan. And for the jumbo mortgage, there's a variety of low down payment options that are available today, up to 95% loan to value. And the current loan limits for 95% would be 1.25 up to 2 million. Again, depending on the location of the property and if you're in a high cost area. 90% financing. So with the 10% down payment, that's going to be generally 2.5 to 3 million. And then 80% loan to value, loan limits even go higher. And then again, there is some higher loan amount options that are available for even a greater down payment beyond 20%. Okay, so some of the details about the most popular program, of course, the 5% down option. We discussed the loan limits there. Generally, the credit score requirements for all of these programs really depend on the loan amount and the down payment. But generally speaking, at least a 680 credit score is going to be required for 95% financing. But once you get into the higher loan amounts, really over 1.5 for this particular program, it may require up to a 720 credit score. These are all fully documented programs, just like any conventional or conforming loan, where they require complete income and asset documentation, 2 years of W-2s if you're regularly employed, and tax returns. Of course, only tax returns if you're self-employed. There are some special options that are geared only for self-employed business owners, which we'll talk about in just a few minutes. The property types, this includes really primary residences. Vacation homes, those are permitted as well, but generally will require at least a 10% down payment. So, 10% for second homes or vacation homes. There are some construction to permanent financing options that start also with 10% down. And this applies for the 95%. It applies for regular purchases and rate and term refinance, so rate reduction refinance. There are also cash out refinance options available, but those are generally limited to 90% financing. The available terms are, of course, all your common and your fixed rate, 30-year, 15-year fixed rates, and then, of course, all the common adjustable rate terms, 5-year arms, 7-year arms, etc. And there are also a lot of piggyback combo loan options now that are available for really a way to avoid paying private mortgage insurance, or PMI, as most people know that term. That can get quite expensive on the higher loan amounts. So there are a lot of options for borrowers to break up their mortgage and do the first mortgage only up to 80% loan to value, and then have a second smaller mortgage to make up the difference. So those 80-15-5 combos, and then 80-10-10 combos for 90% loan to value, those are pretty popular. Another advantage could be also is if you can get the first mortgage at or below right under the conforming loan limit, that could also be more favorable as far as the interest rates and terms available. So the options that are available, of course, depend on the down payment and the overall loan amount requested, but we can certainly review all those options with you and anything that's available. Okay, so for the 10% down payment details, most of this is the same. The loan amounts are going to be a little bit higher with the greater down payment. Credit score requirements are a little bit more relaxed with the greater down payment, just like really any mortgage. Uh, Documentation requirements are all the same. You know, complete income and asset documentation. You want to be sure to document your assets that are needed, really for the down payment and reserves only. And keep in mind that when you're looking at reserve requirements, for these jumbo programs, a lot of times non-liquid assets like a 401k or an IRA that are not liquid, they do satisfy those requirements just to show the reserve requirements that are going to be needed. And that can vary from maybe 2 or 3 months of reserves to up to 12 months of reserves, depending on how high the loan amount is. Property types, again, primary residence, single family townhomes. Most condominiums and investment properties are not permitted. Second homes, vacation homes would be permitted under the 10% down. Transaction types, again, purchase rate and term and cash out refinances up to 90%. And then again, all your common fixed rate options and adjustable rate arms, those are available. And then combo loan options like an 80-10 structure to prevent the monthly mortgage insurance. Okay, so documentation and reserve requirements. Again, these are fully documented loans. So 2 years of tax returns and/or, if you're regularly employed, W-2 statements. Generally 3 months of your assets to document the down payment and the closing cost, the things that are going to be needed, and then maybe your most recent quarterly retirement statement, if you have like a retirement account, that would be needed as well. Again, basic things here are pretty much the same as any other conventional loan. Okay, so some other jumbo loan options that are available for self-employed borrowers. Some self-employed borrowers may have trouble documenting, with their a 2-year net average of their tax returns. That can sometimes be an obstacle as far as being qualified for the mortgage. So there are bank statement qualifying programs that are available up to 90% loan to value. And what these programs do differently is they allow home buyers, self-employed home buyers, to basically use the income from their actual business bank deposits, an average, a 12-month or 24-month average of those deposits is what's going to be used to formulate your qualifying income. So again, if you are self-employed and a lot of times they want to use on a fully documented program, they want to look at a 2-year net average. And again, sometimes that can pose an issue. Really for many self-employed borrowers. So again, qualifying based on actual business deposits. Again, vacation and second homes up to 90% loan to value. And then construction permanent financing, there are options also there that are available up to 90% loan to value. And that's true construction to permanent financing. That's not talking about a regular new construction, let's say a new construction spec home that you're buying from a track builder that they're building, uh, in a, in a track home situation. Those are being sold directly to you by the builder. So in those cases, it's just going to be looked at as a regular transaction, and there's actually financing that's available up to 95% for that. But for true construction to perm financing, that is up to 90. That's a recap of really the latest changes to the program. Again, if you're a home buyer and you have questions, please reach out to us 7 days a week by calling 800-962-0677 and visit us at jumbomortgagesource.com. Thank you.